I went to a few folks. I said, I've got this idea, and everybody said, that's exciting. You should do that with somebody else. A+ people want to work with A+ people. The hardest lesson I've learned has probably been around managing co-founder relationships and co-founder dynamics. You come into the job as an investor and you think people want advice. I think oftentimes they want somebody to listen to them.
All right, welcome back to the VC special series that we're doing. I got my partner here, Paul Irving, and we got a very special guest today, Mark Goldberg from Chemistry. We're very excited to have him on the show. Going to do a little, obviously, table setting that we always do before the show starts with Mark. We'll talk about, some of the ending to the year last year. We put a 67-page report together for our LPs working through the holidays. And that has our predictions, that has our portfolio company review, all 35, 40 of them that we've invested in through Fund 2. That has a little bit around the evolution of the GTMfund and a lot of the support metrics. So we'll just talk a little bit about our predictions right now, some of the evolution things that I think are important to call out. And then, obviously some big news in the interwebs with Andreessen, raising a $15 billion fund, which I think kind of connects really well to some of the stuff that we're doing and talking about in this episode. So, predictions. Paul, first of all, 67 pages. What were we thinking?
When we wrote it the first year, I think it was 19 pages, and we thought this was pretty hefty, but manageable. And I don't know if we had the foresight to realize as the firm gets bigger and the portfolio gets bigger when we got more exciting stuff to write about that it's going to be 67 pages. So maybe we're going to have to in future years split it into editions to get released over the course of the month or something like that.
It's going to be like the Dune series. This like, we're going to have to figure that one out. Well, our 8 predictions, we'll get right into them. So, prediction number 1, that we wrote about, we think the big players are going to come back in a big way, right? So, we're kind of seeing this with Google and OpenAI to kind of end and round out 2025. But, Meta's, we wrote this before the Meta Manus acquisition, but we do think that, Zuck is hard to beat and he's going to come back, strong. Microsoft, obviously, Satya is coming in and personally leading Copilot. And then, everybody thinks that the self-driving car, Waymo, war is already won, and Waymo is going to be the winner. And I think, you don't want to count Uber out. They have a real-world data advantage that's unmatched. So, first one for us there. I think, obviously with Google gaining share, and I think today they just announced that they replaced the Gemini is on the iPhone, replacing OpenAI. It's interesting.
The fascinating thing about that one is I think because of how fast everything moves here, people forget just how much panic surrounded Google this time last year. And it was Google's not going to cannibalize, one of the best businesses in the history of capitalism, which is their search and ad product. Gemini was underperforming OpenAI and Anthropic on some of the benchmarks. And Sergey coming in and, this is why founder-led companies have a history of being absolutely incredible. And I think, you see that in the Meta prediction that we had for them to have a big year, and the $2 billion plus acquisition of Manus is a good signal towards that. I wish we got the report out. I think we got it out the same day. I wish we got it out the day before, so that looked even more prescient. But no, I love those calls. The Uber one especially, I think, is under discussed, where we have a prediction in here about physical world and AI, but they have one of the largest and most compelling data sets in the globe. And it's hard to imagine a world where that's not incredibly valuable.
Yeah. Moving on to 2, going to fly through these here. CFO says it's time for consolidation, but TAM expansion keeps the party alive. We're seeing little glimpses of that here and there. I definitely think, you're not going to have a company with maybe 4 different vibe coding tools. Maybe the CFO says, okay, across the organization, let's pick one. There'll be enterprise grade functionality that's, being built at these companies. So I think you'll start to see more of that. I think that also does not mean that there's going to be some sort of depression there. I think TAM expansion across the board is happening and happening rapidly. And so, these spaces are bigger than previously imagined, and that'll keep potentially all four of those companies, right, feeling really good about themselves, even if they're getting churned out of a business, here and there. So feel pretty good about that one. 3, AI leap to hardware is wildly under discussed. We feel really good about this in our own portfolio. We're seeing it, specific customer support operating systems like Telemetron that helps customers triage Wi-Fi connected devices that they have at home is an interesting one for us. Orion is another one, fixing communication between unmanned and manned aircraft. I think I just saw, a post today how they're starting to do deliveries with drones already in certain cities. So, that's going to be super important. Armada is another one in our portfolio. We're just seeing a lot, I think, in, Obvio, there's just quite a few that, have already stood out to us, on this one.
We're seeing a proliferation of hardware across consumer and B2B. What comes with that is, AI native on those individual devices, or how, an AI native technology layer interacts with those devices. And you see, a reshoring of manufacturing within the hardware ecosystem, more investment in capital going into deep tech, which a lot touches the hardware ecosystem as well. I agreed. We think this is going to be a big year for AI, physical world, and the hardware ecosystem.
Definitely. Next one, pricing and packaging becoming the Cinderella of the new AI era. I love that headline. But in all seriousness, we've been preaching this for a long time. I think seat-based pricing is going to become a thing of the past. I think companies will stand behind their outcomes. I think we'll see credit-based pricing, action-based pricing. I think you're already starting to see that. And you're starting to see that with some of the fastest growing companies. Clay is one in, the GTM world that's an example with that. But I think, you'll start to see a lot of these new age companies come out with these credit-based pricing models, these outcome-based pricing models, workflow-based pricing models. And, people will start to get used to not paying for a seat anymore. And so we're moving into that world. Next one is GTM becomes an even more AI native in 2026. We're seeing that across the board now. I think it's just starting to gain momentum. We got a company in the portfolio, Noble, that is fixing kind of modern SEO, which is now called GEO, generative engine optimization. You talked before about kind of replacing those 10 blue links. I think we're seeing more roles like growth engineers and forward deployed engineers continue their uptick in headcount, and those are helping in go to market in a massive way. Anything to add on this one on the GTM side of things? You just did the TechCrunch podcast on it, so let's get your massive opinion here.
I did the TechCrunch Build Mode podcast last week, and we talked about this. And going into the conversation, it was funny. We were just talking about go-to-market execution and playbooks that are working right now. Didn't go into it wanting to tear some of the old playbooks or set fire to some of the old playbooks, but you're really seeing that in the early stage. But I mean, across our operator network, some of the most forward-looking revenue operators that we see in great companies in the technology ecosystem are pushing the boundaries of what AI enables you to do on the go-to-market organization. Everything from Claude Code building you Clayagents to automate some of the deepest and most compelling research across every corner of the web. Form it to your ICP and be able to execute that directly from the platform. Data and signaling. There's just so many unique things that people can do. And I think we're going to see people push the boundaries of go-to-market even further than we could have imagined a year ago.
Yeah, I agree. 6, this was an interesting one. I think this was definitely a Paul one. Consulting backgrounds back in demand. You want to take this one?
Yeah, I will. Everyone wants McKinsey alum rejoice. Everybody really wanted gold stars for more of our McKinsey and BCG folks, but we are seeing this. It's really interesting. One of the first hires we're seeing a lot of the fastest growing pre-seed, seed, Series A AI native startups making is a forward deployed engineer, but also forward deployed customer success, forward deployed account manager. And a lot of them are looking for people with a consulting background, because for enterprise AI, the actual deployment and integration of a lot of these platforms into workflows and as deep as you can into those customer systems is a really consultative motion. And so having people in these early stage startups that know what that motion looks like, know how to speak to the enterprise, is in really high demand. So another day in the sun for our consulting folks.
There we go. Yeah, we're seeing that reflected in some of the deal flow that we get. So it's super interesting time. An increased acceptance of human to agent interactivity across B2B and B2C. I think that's an interesting one. As we talk to, portfolio companies, more and more of them are warming up to the AI SDR, AI marketer, AI customer support. And it's starting to become, even better for the person on the other side. I think that was the worry, is that like, oh, nobody wants to talk to a bot. Well, now it's like the bot is more knowledgeable than the rep. It's faster. It's reliable. Like the user experience as a customer of the vendor is actually getting better. So they're preferring it. So, I think we're definitely moving into a world where that is not only not taboo anymore, but it's preferred by the end user.
Yeah, I think that's the interesting part, is maybe the change in sentiment that we expect to happen over the course of this year. Because you were spot on. The initial concern is no one wants to talk to an AI agent. I'm a customer. I want to talk to a person. I'm frustrated. But you see, for a certain type of workflow, a certain interaction, a certain customer support ticket, AI native platforms, voice AI is way faster, usually more accurate. And I had it happen the other day on Rippling, looking to get something sorted for us internally, instantly sorted. Expedia, another thing, we were booking a trip, for GTMfund, and a couple team members had to get something fixed, instantly fixed. And that's something you would have to wait for a human support ticket or get someone on the phone. And I think that'll be the big change, is not just that people are deploying this, because that's been happening for a year, 18 months now, but the end user acceptance of this maybe being the best, the fastest, and most efficient way to get things done.
Yes, agreed. And the last prediction, revolt against AI slop and the return of good quests. Love this one. I think, you see this across our portfolio and some of the companies we named earlier. Assemble, transforming hospital operations; Pair2, revolutionizing patient advocacy; Abio, improving road safety through computer vision. But then you get some of these things that have been funded that are in the news that are literally just like marketing machines. And so I think, there'll be less of that and kind of getting back to good quests. I think, who was was it Trey Stevens?
Yeah, Trey Stevens and Marky Wagner from Founders Fund back in 2022. It's something we talk about a lot internally as we're going through diligence, and the type of companies that we want to spend the next decade helping founders build is ones that have a huge impact on the world, and hopefully an overwhelmingly positive one. But I'm getting this feeling that people understand the gravity of the technological shift that we're undergoing now. And as fun as a lot of these hacky tools that had quick ROI and had a flashy demo seemed great in the early days of, post ChatGPT and early days of AI, I think people are really choosing hard quests, difficult problems to solve, things that have meaningful impact on the world, on not just customers, but people, our communities. And it's been exciting to see. So we're hoping, we have been seeing a lot of that, and I think we're going to continue to see even more in 26.
Yeah, I agree. And that leads us into kind of the GTMfund evolution. So we did our predictions. One of the interesting things is it's been 5 years for us. Fund 1, we wrote 50 to 250K checks. Now our average ownership is growing, I think almost 11.9x. Average check size grew 7.5 times from where we started. We co-led or led 46% of our deals in the last 2 years. So now being fully deployed on Fund 2, it's interesting to look back at the numbers, how far we've come. We built XVal, which is our own kind of internal GPT tool that allows us to feed in all of our information on our LPs and then search and query that to support our founders on the problems that they're having day in and day out. You look at, GTM Now, something that didn't exist when we started. We bought Sales Hacker, relaunched it, GTM Now. 50,000 plus newsletter subscribers, 750,000 plus podcast downloads, top 1% podcast globally. Sophie's doing a fantastic job there. We've got the team. Did our first AGM last year. So it feels like we're doing a lot. Tell us about some of the support metrics, that we've kind of put together as a platform. I think we have like last year's versus all time, right?
We did. I'll do the all time ones. to not drag us into too many numbers for everybody listening. But yeah, we over the years of doing this, we got over 4,200 support items that we logged, and we talk about this constantly. There's so many, for whatever reason, that don't get logged or sort of put in our system the right way. But we track them into different buckets. So, over 825 introductions to our operator network for our founders, over 425 customer and partner intros. So warm intros to, potential customers and partners to help accelerate the revenue acquisition side for these companies. The most fundraising warm introductions we've ever done in firm history this past year, we had almost 470 of them. Introduced over 1,400 candidates, mostly on the go-to-market side, but really across the business to our founders in the early stages as they're growing and building their teams. It's been really cool to see those numbers grow, of course, but the million stories that are underneath each one of those introductions. Some of these are pivotal hires that end up transforming the way a company does their go-to-market, or, a banner customer that is an anchor for that company being able to raise Series A.
Yeah, I think the fascinating thing is the timing. We had this report come out that kind of wraps up Fund 2, wraps up 2025 investing, and it talks a lot and showcases a lot of the value of the platform that we've created, which to us is very unique, and I feel like a massive differentiator, especially at pre-seed and seed. And then you have Andreessen announcing their $15 billion fund, and a core message of that $15 billion fund is, hey, we're building this infrastructure for startups that we invest in, because when they raise money from us, they don't have that themselves. So we have the platform, so they don't need to worry about it. If they need customer intros or political intros or candidate intros, whatever it is, Andreessen's platform that they've invested in will support that. Money, you name it. And I feel like we've done this very well on a obviously smaller scale than them, but perfectly for pre-seed and seed in our world. And it was interesting to just kind of hear how they talk about it, some of the things that we put together and how we've been talking about it, very closely aligned there. What are your thoughts? 15 billion obviously is the world of haves and have-nots, and that's a different story, but that's an incredible sum. And we talked in the Slack about it. I mean, very, very similar to how we talk about what we do.
It's interesting. And I recommend for anybody who wants to go deeper, Packy McCormick from Not Boring did a really great deep dive into, the journey of A16Z to now, from inception to now, raising a $15 billion fund, and some of the things that have changed in venture over the years. And one of the interesting ones is, I don't think people realize how few and far between platform was as a concept when Andreessen Horowitz first started. And he had this great quote in here, which I'll read, and then I'll share a couple stats on the raise, because I think it's also fascinating from a sheer numbers perspective. But the quote was, to your point, I think this distinction solves one of the oddest things about venture capital's self-image. The venture capital is an industry that sells the world's most scalable product, money, to its most scalable companies, technology startups, but must not itself scale. And it's the idea that you're supposed to have, a handful, half dozen investors investing hundreds of millions of dollars, but not having support systems and functions that are vital to the company's success, stepping in there and really moving the needle and moving mountains for these companies so they can create magic. And the $15 billion fund is a banner number for historically and also currently. So that represents 18% of all venture capital raised in 2025. If you split out, so it's across dynamism, apps, growth, bio and health, infra, crypto. If you split out the individual vehicles, 4 of the funds individually would be in the top 10 of the largest raise in the vintage. The $15 billion is larger than the next 2 funds combined, Lightspeed and Founders Fund. It really is a testament to scale, I think, the market responding to platform, and a bet on the future of technology that can't help but get you excited.
Yeah, it's extremely exciting. Love to see it. Big fans, obviously, of what they're doing and the scale that they're doing it at. Kind of brings us to today's guest. So Mark Goldberg was at Index, and now he's at Chemistry. Went from big fund, multiple billions under management, in one, not even just under management, in the current fund, right? They're deploying to Obviously much smaller, but still a sizable fund for a kind of a spin out at I think it's 350 million, around that, with, Ethan and Christina. And I thought it was pretty interesting to hear their or origin story, how they all came together, and even more how they kind of generate their alpha. You can't really rest on your laurels in VC. You don't get to like bring the brand with you that much. Maybe it helps you raise money, but I'm not sure if it helps you really deploy capital. It's really about your network that you built, your reputation that you built, and the ways that you go about building relationships going forward with founders of the future. What were your takeaways from the episode, and then we'll get into
great
it.
conversation. Mark is such a smart guy, and him and Christina and Ethan are a great combination. I think one of our favorite, new emerging funds in the market today. I thought the event strategy, so they did 70 events over the course of 2025, which I think is a high number for a large platform fund, let alone, a brand new fund in the grand scheme of things. And the way that Mark talked about that, I thought was fascinating, which events for them is a medium to build meaningful relationships with smart, ambitious founders and to get to know them. And it got me thinking of, okay, what's the purpose? Every fund can take a different strategy. At the end of the day, we're offering a product to founders, and the most ambitious founders will get to choose who they want to work with. And it sort of, as a reflection, listening to Mark talk about their event strategy, and they're doing some really creative stuff. This isn't just, 70 happy hours. He talks about a chess tournament and doing surfing lessons, down in Southern California. But that every fund should ask themselves the same question: what is my unique channel to build meaningful relationships with the most important, ambitious, smartest people in the ecosystem?
Yeah. Well, we'll get right into it. Mark joins us from chemistry, where he's a managing partner. Before that, he was a partner at Index Ventures, did a stint at Dropbox in the early days over there. So brings operational experience, large fund experience, and now kind of small fund. I guess you can call it a smaller fund, obviously the Index, but not too small. 350 million is pretty nice fund one. So yeah, we'll kick it over to Mark and I's conversation. And thanks, Paul. We'll see you on the next one. Thanks for coming.
It's a pleasure to be here.
So, I did a little research, obviously, before this, and saw you studied international relations. What did you think you were going to be when you grew up, when you decided on that? Were you going to be like James Bond? When I see international relations, I'm just like, where is that going to go? Are you going to like CIA? Where does that lead to?
First off, you did your homework. I haven't been asked about my degree, and I graduated, I think, 17 or 18 years ago. So thanks for starting with a great question. And I just have to say, it's awesome to be here. I'm such a big fan of what you guys are building and the community that you guys have assembled. And international relations, I had no idea what I was going to do when I was in college. I was a liberal arts major at Brown, which is about as, hippie and loose a school as you can find. There are no grades if you decide. I took very few classes with grades. You can just decide if it's hard to kind of drop the grade aspect of it. And for me, international relations was just a way to engage my curiosity. It's funny, I joke that venture is basically the liberal arts of jobs because you just meet smart people and learn all day. And that was kind of my college experience. I did a lot I focus on Latin American politics. So I lived down in Argentina for a while. I had no idea what I was going to do as a career. I just wanted to spend time and focus on the things I was interested in.
Has it helped? Like,
yeah,
there's things you learned. I'm sure, like
the things I've learned, they're in some ways absolutely not. The politics of Central America and South America in the 80s and 70s probably less relevant to my day-to-day job. But what we do is global. I mean, think about like how the trade war is affecting the early stage. There are ties here that I'm glad I have some of that foundation for. So in some ways it's absolutely irrelevant, and in some ways it's really helpful every day.
Well, Index was a European firm, came over to the U.S. You were very early on the U.S. side of things, so I was wondering if there's any connectivity there. The James Bond thing was a joke, but like, what was that part of kind of the thought process where it's like, this is pretty interesting. This I can help, this fund jump the pond, so to speak. And since then, they've invested in obviously some pretty amazing companies. I think you were in Plaid while you were there, but they were also in Wiz, Figma, a couple big ones that did to exit. So how is that kind of correlated, if it is?
Yeah, it's funny. I've had a lot of conversations there. Nobody's ever tied my degree to Index Ventures, and it's a great line of thought that I'm not even sure I considered until just now. Yes, one of the appeals of going to Index when I did almost a decade ago was this sense of I can spend a bunch of time in Europe and traveling around the world. I love that. I mean, I love that. I primarily chose to go to Index Ventures because of the people. It was a great group of people and a lot of really strong mentorship at the time. And then it was an unusual situation, as you described, where Index was actually born in Geneva, Switzerland.
Oh, wow. I didn't even know that.
Yeah. It spun out of a family office in Geneva, Switzerland. They started doing venture capital in Europe before anybody had figured it out. And then they realized maybe a year before I joined that they needed to be in the most important market in the world, in the US. And so they started to build an office and a team. I was part of that early team. And I loved the sense of, okay, I'm going to get to see the world through this job. And also there's this opportunity to take what was really a world-class brand in Europe and see if we could compete in the most competitive market in the world. I've always loved competing. I've played a lot of sports. I like the feeling of competition. Venture is a great asset class to be in a part of if you like to compete. That was a lot of what drew me in.
Yeah. And so you were early there, obviously great investments, spun out recently, and we'll cover a lot of this in depth, but spun out recently and started chemistry. What was the impetus for that? I mean, you had this, and I want to get so deep into this because you had this massive logo behind you, obviously, that had these big investments. And to go from that to now not having that, but just having your personal brands. And the three of you have very strong personal brands, by the way. Obviously, proof is in how you were able to raise a very strong fund one, how you're able to still win incredible deals. So, why, first of all, start your own fund, spin out? And then how has that gone? How was the fundraise process? Yeah, tell me more about that.
Yeah, sure. Well, let me give you a little context. When I joined Index in 2015, the brand now, I mean, I'm so proud of what that team has done to build a presence and brand in the US. And what an incredible year for Index Ventures. They had realizations for some early investments companies like Wiz, Figma, Scale. I mean, it's been a really incredible year for the team. But when I joined, we were invisible in the US. I still remember I joined as an associate. So I was doing a lot of the sourcing, cold emailing people. And I would constantly send emails, I'm Mark at Index Ventures. And if I got a response about half the time, it would be, hey, thanks, Mark from Insight. Like, we'll get back to you when we're ready. I'm like, I'm not Insight, we're Index, like it's always one of these things where, 10 years ago, it was really, we felt like we were fighting and scraping for every meeting we were getting. And I think that actually was quite helpful in preparing me for the experience of starting a new fund. The reason I left and Christina, Ethan, and I spun out about a year and a half ago and started the fund almost exactly a year ago was we really felt pulled into the opportunity. We had all lived inside of the big multi-stage funds, and we thought that as those funds had started as kind of smaller partnerships but grown into these big asset managers, there might be an opportunity to take some of the best DNA from some of the top multi-stage funds and reconstitute it with focus. And that's really that was the hypothesis. We kicked it around for years, and I was chatting with somebody yesterday. It's hard to get on the same wavelength in terms of, is now the time or is, a year from now the time? But after some conversations, we felt really compelled that this was the moment and took the jump. And it's been really fun.
Why them?
Well, that's a great question. And it's funny. I have so much more empathy for founders in their own co-founder dating journeys. For me, I knew I just turned 40 last year that I wanted to eventually do something on my own. I also knew that I wanted to do it with other people. I think there's some amazing solo GPs out there, and God bless. Is that who I am? I've always been more of a team player, and I love having that kind of sounding board pushback, ability to kind of divide and conquer. So I knew if I was going to start something, I was going to do it with a handful of people. I didn't want to do it with two. I thought that two was just going to be two forever. There's a lot of those examples. I thought we could start with three or maybe four. We could lay the foundation for something that could kind of, grow in time. That was very appealing to me. In terms of the specific people, I started with who are the people I most respect in the ecosystem. And I had a list of, say 10 names.
That you were already close with.
And the way that I drew the list was, and it'd be interesting if you talk to founders about their own journey. I thought, there's no way I'm starting this with somebody I haven't worked with before. It's too much risk.
Yeah.
And
your job is right. It's just like massive upside with as little risk as possible, right? So like that's just adding way more risk, but for potentially not as much upside or equal upside to what you already know, right? So
that's exactly right. And you started, if you took a clean slate approach, maybe you'd say, let's get the best resumes, in the world. That was not my approach. Was who are the people I wish that I could work more closely with? And it was mostly I started with board members who I'd worked with. I was on, I think, 23 boards at Index when I left. So I had kind of started with, 50 folks that I'd spent a lot of time in the trenches with, and then just people who I'd been trading deals with forever. And I'm sure for you and maybe some of the audience who's investing, you kind of build these informal, I don't want to say investment committees, but friend groups that oftentimes for me would act as one of the most powerful sounding boards as I was debating an investment. And oftentimes those were outside of my institution. And I went to those circles first. I said, why don't we make this the real thing? We're doing this anyway. Every time I do a deal or I think about a deal, I'm calling you for feedback. You're calling me. We should kind of bring this together.
Was it scary?
It was terrifying. Yeah. Totally
It
terrifying.
was spinning out on your own. I mean, like, did you have LPs lined up already or deals warehoused or anything? Okay.
Nothing. There was the way that we actually came together was Ethan. So I went to a few folks. I said, I've got this idea. If we all came together, this is kind of the thesis. And everybody said, that's exciting. You should do that with somebody else. and then including Ethan and Christina. Ethan, he'd been at Bessemer for 16 years. He was a lifer. Everyone thought there's no way Ethan's going to leave Bessemer. He's been there forever. He's such an important figure there. But Ethan called me 6 weeks later, and I was like, I can't stop thinking about this. And he kind of incepted me with this idea. We should go explore this. And we met in a coffee shop here in San Francisco, and we had drawn lists of the people we most respected because we were already aligned at that point. Let's start with a handful of people, not just the two of us. And Christina Shen was the top of both of our lists. Christina and Ethan had worked together at Bessemer. Christina and I had been on some boards together.
And she went to Andreessen, and then
You're exactly right. So they had been at Bessemer. She'd gone to Andreessen for 5 years, and we sent her a text message, which I probably have somewhere on my phone, that was like us kind of cheekily holding these lists, saying like, you're the top of both these lists. You should reconsider. She just had her third kid, and she started to think about it, and then we started to meet a little bit. And I think that process of spending time together was how we really built the conviction. But it was terrifying. I mean, I remember, some of these days where we didn't have anywhere to work. We'd be squatting in the friend's office for the 5th time, feeling like the guest that kind of overstayed the welcome.
Yeah, exactly.
What do we do now? Like, and that's all part of the fun now. But
yeah. From starting as a small operator-led rolling fund to evolving to an institutional platform, AngelList has been a core partner in every phase of GTMfund's growth. Their software-first fund admin infrastructure allowed us to scale without sacrificing agility, from onboarding hundreds of LPs seamlessly to handling compliance, capital calls, and reporting as our fund size evolved. As we expanded from Fund 1 to Fund 2, AngelList took care of the back-office operations, allowing us to stay focused on what matters most, investing in world-class founders and building the strongest go-to-market network in venture. They scaled with us across multiple funds and into the future. If your fund is growing in size or complexity, check them out at angellist.com/GTMfund. That's angellist.com/GTMfund. So I want to know how you came up with the name, the thesis, and then how the fundraise went. Because again, you lose this kind of big logo behind you, but you still have it as, part of your pedigree, part of your resumes. Then you also have your reputations, your board seats, your founder references, all that type of stuff. So, you're not starting from scratch by any means. But there are still probably LPs who are like, well, can you even do this on your own without, index deal flow or whatnot? And then, and then 350 is a very large fund one. And then also the thesis. So, how do you differentiate even beyond your reputations? How did you decide what stage you want to stick to and how the reserve model would be built and all that? So where do you go from there? Okay, the three of you were in, then what?
I think the first thing when we were in was we're in and aligned on the strategy. And the strategy was very clear from the beginning for all three of us, which was we're just to an early stage, and we think that focus is going to be a weapon. And
early stages precede seed A, seed A.
That's exactly, yeah. We say from inception to Series A. We'll flex maybe like a late A, early B, but that's kind of we want to be part of that product market discovery journey where we're in the trenches with you building. And I think when we looked at it, what we loved about the job, that was the part we loved. It wasn't kind of the stock picking at the later stages. It was, it's risky, but we want to be part of that journey. And doesn't work. If it works, we get this bond. That's kind of, when you ring the bell on the stock exchange, you're kind of like, hey, it wasn't that obvious. Remember that co-founder breakup? Remember when we almost ran out of money? Like, those are the parts we all
remember when we were the only ones at the table in the beginning.
Yeah. I just actually last night signed a term sheet with a Series A company, and we took a picture in the office, and they were like, hey, let's clear out there's all these boxes behind us, cardboard boxes. Let's clear those out so it looks nice. Like, leave them in. it's going to be that much more fun when we're taking this picture 5 years from now. You're 1,000 people.
The uglier the background, the
like,
better. The more it looks like sacrifices were made. Exactly. Yeah.
Really agree.
Yeah.
So we were aligned. This is what we wanted to do. From that, we started thinking about the right size to affect the strategy we wanted. For us, it was, we think we can handle 3 or 4 investments per GP per year. And then it was about this check size. We actually have a very light reserve model. Our view was we want a lighter reserve model where we're not just going to kind of paper our reserves across all the markups in the portfolio. We're going to pick a handful of winners that we are really high conviction on. And we kind of built the fund math through that. We then started having some of the conversations with LPs. I think we were very fortunate in that we had done some of the fundraising for the previous funds. And so we had some relationships that helped to kind of jumpstart that process. And I think that, we tapped into some interest in the LP community for a smaller fund that had established GPs, but not so much so that, we were not interested in working really hard. And I think, the people who we ended up partnering with ended up appreciating the dynamic of, yeah, we love the experience and hustle as a combination. And we really want to find a fund that's small enough we could see, the traditional venture returns. And when you look at some of the mega funds that are raising billions and billions of dollars, it's harder to imagine 10x funds just based on the size of these vehicles. And I think there were some LPs who saw, okay, with the strategy you're pursuing, you could be right, you could be wrong, but that supports the ability to really, if you hit a few of these big winners, to be in really good shape for a really strong performance.
And it was 350, and that's a 3-year deployment, fund 1. So do you have an idea of what you're going to do continuing? What's fund 2? What's fund 3 look like?
Yeah. So we are about, let's see, just over a third deployed at this point. We've got about 120 million in the ground. And yeah, I think the strategy hasn't changed. We're going to continue to stay early stage focused. Our pitch to founders has been experience and hustle. That's going to stay the same. And we take pride in having a small team. We're 9 people at Chemistry right now. That's 6 investors, and that's not going to grow.
That was going to be my next question. So are those investors kind of principal level or
we
partner?
We just have 2 levels. We have GP and non-GP, or we just call investors. But they're fantastic. They're really critical to the operations right now.
Where did they come from? Other bigger funds or
different backgrounds? We had a strong thesis that what we really wanted to solve with the non-GPs was for access. I don't need help doing diligence on a spreadsheet. That's in some ways that feels like an unnecessary addition to the fund. What I need help with is there's a demographic of 22-year-old founders that are coalescing in this environment or in this community that I don't feel like I have strong inroads with. If we can hire some people who can plug those holes in our network, we're going to be a better institution. And our pitch to these investors was, you can join a team where, we're going to have very little hierarchy. We're going to give you a lot of room to run. And I think that combination has worked very well so far.
Yeah, it's amazing. I mean, it's great that you had this connectivity with those 2 partners beforehand, and you didn't really have to do the whole like date before you married type thing. I think that's very important. And then as you round out the rest of the team, were these people that even the ones you're bringing in now, were they ones you already knew, or you ran hiring processes?
We interviewed about 150 associates in the first 4 or 5 months of the fund, and we ended up with 3 that we're very proud to have brought on. Yeah. I would say my co-founder Christina's superpower is her access and network within the junior investment community. I think she has done a really wonderful job over the last 10 to 15 years of just treating people very well and being very approachable for people who want career advice as they're moving up their own journeys. I think that was a real advantage for us as we were going through the hiring motions. And then I think we were also very aligned on the profile we wanted, which was, we didn't need the former investment banker turned private equity analyst. We needed people who were kind of in the right pockets of people that could complement our own networks. And I think that alignment helped us know what we were looking for.
Yeah, and you're an industry veteran at this point, so you learned a lot of, the do's and don'ts. So I think you probably apply that to the hiring process. But have you sat down with your GPs, Ethan and Christina, at any point in the maybe foundational period, put down, your own tenets, your core values, or whatever that aren't investment thesis or mandates related, but are more like, hey, here's how we want to build the brand? And what are some of the things that you've brought from Index, Bessemer, and Andreessen to chemistry that that are kind of tent poles or founding pillars that you're like, oh, I'm so grateful for this maybe larger institutional experience that now we're able to do this in a kind of smaller, more customized way, but are foundational tenets for you?
So I think there's a few things. We have some values that we aligned on right out of the gate. The first value I have is excellence. This is an industry where performance matters, and I think performance is actually one of those things that sets cultures. My first job in Silicon Valley was at Dropbox, and we spent a lot of time when I was at Dropbox thinking about culture in an environment when you're tripling or quadrupling a team every year. You really have to think about how to tie people together. We thought about the perks that we could offer. We thought about, the quality of the office experience. And in hindsight, I think none of that mattered. I think the only thing that matters, or the anchor of a culture, is A+ people want to work with A+ people. And that performance is what keeps everybody together. And that's one of the tenets that we set out with chemistry, which is we're going to have a lot of fun. And I think that's one of the things we spike on is nobody takes himself too seriously. It's an office where we have a lot of inside jokes. We're playing pranks on each other. I mean, it's a fun environment, but we're working our asses off. And at the end of the day, if we're not performing, none of it matters. And so the first value is excellence, and everything kind of comes downstream of that. With regard to what we took from the previous institutions, we took a lot and we left a lot behind. Um, I would say it probably manifests the most in our individual investment voices. And I was so grateful for the experience at Index, where I still remember showing up to Index my first day on the job, and they wouldn't let me bring the PC that I was most comfortable doing Excel operations on without a mouse. And I was like, how am I going to do the job here? You guys hired me to this job, and yet you're not letting me use the tool that I need to be effective. And I remember maybe it was Danny Reimer, maybe it was one of the other partners sitting there, like, you don't understand the job. Like we're looking for great people, and this is not a growth equity job. This is a job where we need to understand the holistic, kind of set of criteria that make this team exceptional.
Especially, the early stages, you're not going off spreadsheets.
I didn't know what I was doing, first off. So I was already clearly starting. I was fortunate to be where I was, but clearly didn't have the most absolutely wouldn't say that was but it was this jarring experience. Like, no, this is, you don't need that. Get rid of that. Like, we get the Mac like the rest of us. And I think that part of the Index, attributes that I take away is they were very good at picking great teams early. I think that's why you see the performance where it was, and that's something I look for. My early stage portfolio is very much informed by, do I believe in this team? Do I believe in this founder? Not thematically, these are the three things I expect to happen in the next 2 years in fintech or AI or software, and I'm going to invest behind that. So I'm very grateful for that experience. I've taken that with me. I think if you ask Christina from Andreessen, I think Andreessen is very good at swinging for the fences. They really think about the upside, not the downside. Let's make sure we're in the highest quality assets. And I think that's a great lesson. And I think Ethan is probably the most structured of the three of us. He almost backs away from situations with heat and thinks more from first principles about, not where is the market pushing me to make an investment, but more independently, what do I think are the most important things happening right now, and how do I invest, even if it feels like it's really off the beaten path. And I think that mix has been it's been very helpful for our first year in business.
How were you and these folks managed by the GPs and their businesses, and how are you reflecting that as you manage some of these people that you hired that are investors at your fund? Because they're now all of an extension of your brand.
Yes.
They're first touch, they're driving a deal from start to finish. And by the way, like, is there an IC where the three of you have to have some sort of consensus when a deal is done? I'd love to know kind of how the management styles of, what are the things that you've taken from those bigger funds, mirrored now at your fund, and then what does the IC process look like?
Well, the first thing I'd say is on the management question is one of the reasons the team is small is because we don't think that venture scales very well. And we felt like some of the mistakes that we'd seen from these large institutions is the mistakes all bureaucracies encounter when they get bigger, which is you lose focus on the main thing. For us, the main thing is finding and backing great founders as early as possible. And you wake up one day and half your time is spent on internal matters. Mm-hmm. We wanted to create an environment where we weren't going to do that. And so far, we've succeeded in that sense, which is the vast majority of our time. Is
No HR function.
yeah, we don't have time for it. It's and we design this fund in a way where we just don't. That's not going to be the focus. The focus is going to be extremely high quality people. When we pitched LPs, we said that are going to fit around one table. It was funny because we would sometimes pitch this in a room with an LP that had a 40-person table, and we had to clarify that's not really what we meant. We meant a small kitchen table, and I think that has made it such that everybody has to stand on their own 2 feet. We can't kind of carry people that aren't performing. But when you have high performing people together in that you're a SWAT team. You can move very quickly, and that's been a real superpower for us. I also think, and I'm very grateful for the first manager I had when I was at Index, is a guy's name is Ilya Fushman. He's one of the GPs of KP now with Mamoon. I mean, they've done such a great job the last 5, 6, 7 years. But Ilya brought me into the industry, and his management style I'm so grateful for. I would describe his management style as a shit umbrella. And by that, I mean, he said, this is what's important. I'm going to block every other noise out of what's not important, and I'll deal with that. That's my job as your manager. And your job is to go find and do great deals. And I love that. I felt so empowered. Every day I'd wake up and I know what I'm doing. I'm going to go out. I'm going to meet 40 founders this week, and I'm going to figure out which the best companies to invest are. And the ability to do that without distraction was such an awesome management technique that I think made me successful. I think made the institution successful. And I think a lot about that now for the last, 7 or 8 years that I've been a manager, certainly a manager of chemistry, where my job is not to micromanage the people under me. If that's the case, we've already gone wrong in terms of the hiring. My job is to create an environment where they can be very successful and to block some of the noise from things. They don't need to deal with, issues X, Y, and Z on the finance and operations and LPs. They need to be focused on who are the people when you see the smartest alumni leaving, Prod and Cursor, who is that individual and how are we well positioned to get behind them as quickly as possible? So I think a lot about a management style that's reflected in some of the benefits I was given coming up in the industry.
Love that. Resonates deeply. And, curious, how are you leveraging AI and software in that access process? So you've got these investors, they're chasing deals, you're chasing deals, you're not to give away too much of your secret sauce, but like I know you probably got your ways of finding things, just like Anna mentioned there, where if we find somebody that came out of Palantir that's building X, like let's get to them super early, right? So are there tools that you're using that are off the shelf? Is there anything that you're building internally at the fund?
So I wish I had a secret sauce that I could withhold from this conversation. I don't. It's just pure. It's a sweat equity game.
Pure awesome.
It's to me, especially as a new fund, we're trying to find the future founders and the early stage founders that are going to create the next generational companies. I have not found a shortcut other than working really hard to spend time with those people. And that manifests in different ways. We've done something like 70 events in the first 10 months of the year. That's breathtaking for us. I've never been that active in terms of kind of the number of activities where we can kind of create opportunities to meet people. But that's the ground game we need to be doing to be in front of the best founders. And so we have not found the substitute with data science, with other tools that has replaced what feels like the core of the job, which is spending time with great people. The tool we most use is Granola. It's funny, I kind of fought it when we first started the fund. It felt a little creepy to have something recording a conversation. Granola, for those who don't know, is a note-taking app, but it's a much more powerful tool than the rest of the market. And so we've really become dependent on that as the backbone of our institution, where every conversation internally, externally, to the extent people are okay with it, is recorded and synthesized, and we learn from those interactions. We have a great way of tracking what we're doing because of that, and that's probably the most critical part of our internal tool stack.
So it sounds like events have been a big driver for you. Yeah. So what are the events?
It totally depends. I'll start with what they're not, and we made this mistake early on. We started with happy hours. We first off, our budget when we were doing the budget for events, wildly or it's made it the happy hour spend, because nobody drinks in San Francisco. So we would go, with a $3,000 minimum tab somewhere, and we would spend $80 on seltzer waters and athletic beers, non-alcoholic beers for people.
You need like microdose mushroom bar or like a nootropic bar or like a nicotine packets or something like that, whatever the trend of the day is.
Exactly.
Yeah.
Exactly. But I think what we realized is you got to do something a little bit more interesting than let's get everybody together around a bar. It just, people are busy right now. This is a different San Francisco than 5 years ago when people had time for that. Nobody has time for that. It's almost adverse selection. They're like, hey, come hang out. It's at 6 o'clock at a bar. I'm working. I've got another 4 hours of work.
Haven't you heard of 996? This is in the middle of my 99. What do you work? Yeah.
So I think we realized that some of these generic things that, 5-10 years ago we would have done just don't work. And so we try to put a spin that's a little bit more interesting. I think a lot about ways of meeting people where they are in terms of hobbies, or in terms of interests. I'm in the process of right now of organizing a large chess tournament, speed chess tournament, where we're allowing some of the best startups in Silicon Valley to nominate their top chess players, and then having a kind of a tournament of sorts to figure out who's the best.
Do you play?
I will. I'm very bad. My elo is very low. I love it. I'm an avid but very bad or mediocre, I would call myself, chess player. But I think something like that where we can kind of stand out a little bit different. We're hosting a surfing event in December that we're having some founders and researchers join. So we're just trying to do things that are a little bit different, that have a little bit of novelty. And I think, again, as a new brand, that's something we care about. We're also trying to invest in, some larger events, some speaker series where we have some great people coming in to talk about their journeys in the industry. And you had asked me earlier about the name of the fund, and it ties to some of the ethos we create. When we started to talk about why we were doing this, the reason I wanted to work with Ethan and Christina is when I was on those boards, I would ask the founder, who are the best people that you go to for advice? It was always Ethan and Christina. I hope other founders said that about me, but the boards I was on, they said Ethan and Christina. And I think that there was this sense of like, they really are there for me. They really get me. And they make the time at 11 p.m. on a Saturday night when I have something important to talk about. And we thought that ethos of being there for ourselves, for our own team, having that chemistry with portfolio companies was kind of the bedrock that we could build an institution around. And some of the events we're doing right now, we try to bring that same ethos, which is it's going to be a little different. It's going to feel a little bit more intimate. And so far that's been working well.
That's great. What did you learn from Drew at Dropbox?
Oh my gosh. First off, he's a great guitarist, which I feel like gets kind of
lost. Yeah,
it gets a little bit lost. And I'm an interested but not a great guitarist, so it was a little disconcerting. I remember you would sometimes go to his office to, I was on the biz ops or the finance team for a while, and I'd come in with a spreadsheet to talk about, the cost of, our data center build out or something. And it was a little disconcerting because he'd be strumming the guitar. And you're like, this is pretty serious. Like, we're talking about a lot of money right now. Like, are you sure? And just kind of how he focused.
Look, kumbaya attitude.
Like, maybe we need something.
The burn is out of control. It's okay, man.
Yeah. But I think one of the things I learned from Drew was he ran the company with a real sense of empathy. He has a leadership style, and Arash had a leadership style as well. That was, we want to hear what you have to say. There wasn't this sense of, who are you, young junior person? For me, I was transitioning from Wall Street. And I was really a fish out of water when I first got there. I mean, I showed up for my first interview wearing a suit because I thought that's what you do. In Wall Street, that's what you do. And I was lucky enough to have a friend, Adam Nelson, who's now a partner at First Mark on the venture side, who saw me sitting in the lobby in a suit 15 minutes early. And he's like, you got to get out of here. If you show up in a suit, the engineers are going to say no before you even start the interview. And I was staying at a hotel about 20 minutes away. And I sprinted across, the 1.5 miles to get back there, changed into, uniform, showed up 20 minutes late for the interview, fully sweated and disgusting. But it worked out from there.
So that's awesome.
Yeah.
So that was a formative experience for you. Like, one, it was your foray into kind of tech world. Two, I'm sure you got to understand like what a great founder looks like. I mean, that was probably huge for you going into VC.
Yeah, and I would actually argue more so it was my crash course in tech. I mean, I still, the vernacular of moving from a private equity fund to an institution where there are designers talking about pixel, it was jarring. I mean, I don't think I understood 80% of what people were saying to me the first 3 to 6 months. So I feel very fortunate that they took a bet on me, and I was able to kind of use that as the education process. What was more important, and I think I had an intuition behind this, but it certainly played out later in life, is the group of people at Dropbox was phenomenal. It's the best network I've ever been a part of. There are, I think, 15 Dropbox alums in venture. There's another 100 people that are founders, and the ability to kind of stay close to that community over the last decade has been really one of the things I'm most grateful for in my career.
It's a great alumni network for sure. And they were like super early in kind of the SaaS world. So that even Box alum, Dropbox alum, I think there were like a handful of companies that were kind of out at around the same time. It's exciting. That's cool. So you're new fund now. I don't think I got an answer on this part. So I see conviction or consensus.
It is conviction, not consensus, which was a very deliberate decision we made. So the way that the model works is any GP can pull the trigger on a deal within a certain parameter, basically a core deal for us. If you want to put 20% of the fund into a deal, you got to have more of a conversation. Our view when we looked at our track records over the last 10 to 20 years was our big misses, and I've had investments that went to zero and didn't work, but our big misses were the omissions, not the bad investments. It was the one where you realize that, Uber was going to be super exciting early on, but, maybe a lot of people thought it was crazy that somebody would get in the backseat of your car, which it was, right? Or, Airbnb in your house. And so we wanted to create a voting structure where we didn't solve for an average. We allowed the outliers into the portfolio. And that's what we've done. In practice, it's very collaborative. Our whole model is we kind of co-work deals together. And a lot of the deals that we're winning, I think we're probably winning because people see the enthusiasm and energy we're bringing as a full team. But ultimately, we think conviction sits with the individual at the early stage.
And is one of you three always the driver for the deal with one of the other partners? Are you taking the board seat? Are they taking the board seat? How does that work?
So right now, it's the GPs are the ones taking board seats, but we're open-minded. I mean, we're kind of evolving as an institution, and we'll see where that goes.
And you hire great people. So if somebody that is an investor comes to you and they're like, we have to do this deal. If they have trouble articulating it, the reasons why, or just unfavorable between the GP, do you not do it?
So what I would say is we were so selective in who we chose to work on this team that we have so much respect. I mean, our junior team is crushing it. And so for us, it's not, hey, thanks for bringing this investment that you're excited about and, go pound sand. It's great. Help us understand. Maybe I don't see it the same way you. Help me understand what you're seeing.
So they have to sell you. They still have to.
We have to collaborate on this stuff to make it effective. But what I would say is more broadly, we kind of think about the fund as anybody in the fund with a good idea should put their hand up and do it. We had an example yesterday where one of our EAs realized we were about to show up for this important meeting empty-handed to an office that all the full investment team was going to go to. And without anyone asking her to do it, she ended up getting a bunch of donuts and cupcakes that we could bring with us with some really fun things with their logo attached. And I love that kind of stuff.
That's amazing.
Yeah, shout out to Gianna who did that. And it's just kind of the attitude of we're a small team, we're a startup, right? Like everybody. I mean, I think the downside is you gotta work hard. There is nowhere to hide in a startup. You're either carrying water or you're not. So there's nowhere to hide. But if you like that kind of thing, it doesn't matter if you are a founder or an EA or an investor. If you've got a good idea, we're going to give you some time to run with that. And I think that has been a very effective tool for us so far.
Everyone should look at that as like the foundation of their career. This is the time to do it. And it's funny because like we had the conversation before we started rolling, but like when do you get to relax? Like when do you get to chill out? Like when does it get cushy? It doesn't.
Let me know when you figure it out.
Yeah, I haven't figured it out. It doesn't. No,
I mean it's always, to me, I've always felt like there's this choice you make. Are you? I think about things in maybe 5 to 10 year chunks, but I was really fortunate. I got a handful of months off between index and chemistry. I spent the whole time with my family. I have now 3 young kids. At the time, I had 2 young kids. An incredible time. And then now is the season for work. I think that in any new job, and for us, it's a new fund, you kind of set the tone in the first year, the first 2 years. I hope we're great. There's a lot we got to get right, but I'm not leaving anything to chance. We're going to put everything on the table. Yeah. And I think we're going to give ourselves every opportunity to be successful. And then, we'll see how.
Absolutely. I mean, do we make great investment decisions? Time will tell. But I'll tell you what, our founder references will be off the chart.
That's my hope. That's my hope. And not shame on us. There are things we can control and things we can't. How hard we work right now is going to be one of those things we can control, and we had to align on that as we started the fund.
Speaking of good investment decisions, so we had a lot of this conversation was kind of about a lot of things you learned from your past that you're applying to today's reality. Where where are you looking to invest? Are you completely generalist, B2B SaaS and AI? What's the I'd say like mandate or thesis that you've underwritten towards?
So it's generalists. We're going to look at anything at the stage. So I would say we're stage experts, but generalists from a sectoral perspective. Each of us brings thematic viewpoints to that lens, which is I've spent a lot of time in fintech, spent a lot of time in AI at this point. So we're operating under different theses that and a lot of this is different because we're publishing a lot of our viewpoints at this point in terms of the content we're putting out. So there are perspectives we have on the industry. But I go back to what I said earlier, which is, you show me a great founder, I'll show you a great investment. And that's a lot of what I'm looking for, which is how do I find somebody that I'm just so compelled? A question I always ask myself is, would I go work for this person? If the answer is yes, that's a pretty good signal that we should be thinking about this as an investment.
How close have you ever come to like actually doing that?
I think that it's one of these know thyself moments where I love what I do. I don't really want to operate. I think that I've got the best job in the world.
Because you were at Dropbox, you had the operator experience.
I did.
I was kind of wondering before we even got into the Q&A of this, like, I wonder if you'd ever go like start a tech company or like go be a COO or something like that. So
I have so much respect for especially people in your audience where I think there's such a skill to running a large company. I think I'd be okay at it. I think maybe there are things that I think I would be good at, things I wouldn't be good at. But in terms of what I love doing, I get to talk to you. I get to go after this. I'm meeting 6 founders over the next 5 hours. I mean, I couldn't think of a more fun thing.
Well, LeBron's a freak athlete. Doesn't mean he should go play football. Like it's okay. It's like, we all have our.
It really hasn't been something, and I think in some way I've kind of scratched the itch of a new learning curve by starting this fund, where I had no idea if I would. What I knew is I love investing. I had no idea if I would enjoy building a franchise. I'm having so much fun. I mean, even small things like when we were making the website and thinking about the design and the ethos, the office layout, things like that, things I never thought about before. I'm sitting there 2:30 in the morning debating this shade of purple or this shade of purple. And it's because it's like, this is our brand. This is how we're going to represent us to the world. I love that stuff. And so I think in some way I've kind of scratched that itch right now by being able to think holistically about, how do you take something from a concept to hopefully, a brand that can really stand on its feet for the next few decades.
Yeah. And you're so generalist, B2B SaaS, AI.
Yeah. What I'd say on AI is we see a lot of what I would call AI whitewashing, which is, we do not get a pitch anymore from a company that doesn't say they're an AI. Every pitch we get is, I'm an AI company. Yeah. And I think a lot of our job is to figure out, well, what does that mean in the context of what you're doing? And you could argue we've made 12 investments so far that all 12 are AI investments, or you could say, a handful are and a handful aren't. And it's kind of, the narrative you want to put around these stories. But certainly AI is a critical part of everything we're looking at. I mean, it feels like investing, after the mobile boom, where people would say, "Is this a mobile company?" You're like, it's Uber. I don't know. It's a great company. They have a mobile component to it. Yeah. So that's a lot of what we're seeing in AI right now.
They talk a lot about different types of investing. So, there's like the prepared mind type of investing where it's like, these are the sectors we're focused in, only these 3 sectors, et cetera. Then there's obviously the more generalist approach where it's like, well, if I meet a great founder and they know more about that space than I do, then why should I be pigeonholed into these buckets, right? So it seems like you're kind of more in the second bucket where, you'd rather meet somebody exceptional that's working on a space that they know really well, and then you go and do the research on the space to kind of see if they know that, fact check that a little bit, or the other way around.
What I'd say is it depends on the GP at chemistry.
Okay.
My own style is the latter. I will have a prepared mind on a handful of topics that I'm thinking about, but I'm very much driven by the quality of founder I'm meeting and the sense of, what is the terroir of this person? Like I'll probably meet 1,000 founders in a year, and there's a handful you meet and you're just like, I have to work with this person. And then I think if you asked my other partners, you'd hear different answers. Ethan is very thematic. He's really focused on where's the world moving. I think it's very much the Bessemer DNA of roadmaps and looking thematically at where things are moving. Christina's probably somewhere in between. And we like that. We like having the different voices. We think that makes us a more powerful kind of decider of what to invest in.
Sounds like you have good chemistry.
Yeah.
There you go. Yeah.
I'm trying to avoid the pun as much as I can.
Yeah.
But
it came up. Who do you, who outside of, I guess, indexed and chemistry, like, do you learn from? Are there any podcasts? Are there any individual VCs that you've kind of like looked up to that were always outside of your organization that you've gotten an education from?
Absolutely. I mean, I think I've been so fortunate. There's so many good people in the industry who I've been able to kind of learn from over the years. I mean, and then there's just funds that have built brands in the last 5 years that I also respect. I think Sarah Guo has done an amazing job of conviction. I mean, she took something that, she's built this sense of this inevitability around the success of that institution, which is incredibly impressive. They're about 2 years in front of us, and I've been really inspired by a lot of the work that her and the rest of the team at Conviction have done. I think Jack Altman is doing a killer job. I think he's so authentically who he is, and he knows what he likes, what he doesn't like. I think he's got a great investment voice, and I think he's building a really strong brand in the ecosystem. And then there's just mentors that have kind of always been people I've called over the last decade. Mike Volpe from Index, who is somebody I've worked really close with over the years. I love the way he looks at the world and thinks about making decisions. That's influenced a lot of how I make decisions. Ilya Fushman as well over at KP, Mamoon over at KP. I know you had some of the Meritech team on earlier. I think they're doing extremely interesting stuff on the growth side, IVP as well. So yeah, I mean, I think one of the fun things about this job is if you're a sponge, there's a lot of great people to learn from, and I try to approach it from that perspective.
It is funny because you mentioned earlier the competitive element of it, but then there's also just this kind of feeling of, well, we're also kind of friends in other ways.
Oh, and, industry in that sense.
Exactly.
It's like this co-option of,
Yeah.
80% of the time you're collaborating and 20% of the time you're competing. And I think if you can't appreciate the nuance of that, you're kind of in the wrong field, because it's like a prisoner's dilemma played 100 times, right? Like there are people where, reputations are long in this industry, and that's a lot more important than any one deal on the table. And I think a lot about that. And, I try to get it right as much as possible. Sometimes I get it wrong, but I think a lot about the long-term nature of this game.
Yeah, I've always had that, in my head is like, as an angel investor and now running a fund, like my fiduciary is to my LPs. Yeah. And when I was an angel, it was to myself, as my own financial advisor. But now it's to all my LPs. And there's some times where, you get in a situation where it's like short term, I could be very greedy, but I think this would negatively affect our long-term ability to make money. And so therefore, reasonably, we're going to leave this on the table or not make a big deal out of this one thing in order to go for the kind of long-term upside of what we think a good person would do in this situation, right? And
you had to make any of those hard decisions recently between kind of the short-term and long-term.
Yes. And, the funny thing is, the reason why I bring it up, and it's in the context of this conversation, but I actually don't, there are people in the industry that don't pick the right thing. And then you're like, okay, mental note, like that I don't think was the right idea. It was very greedy, screwed over a founder, screwed over employees, or screwed over other investors. And it was like, for what? Like this, because you had like some kind of vendetta with another investor on the cap table or something like that. So in this one situation that just happened, we actually did not get screwed out of it, but other investors did. And it was one of those things where I was like, wow, what a move to just like an ego-driven move anyway. I think I did not ever see that on the operator side of the house. And now you're kind of getting this like backstage view of it, and I'm like, what
a fun, it must be cool to be behind the curtain now and see. I think one of the things I saw when I went behind the curtain was there's so much random walk nature of this job. You think, oh, there's this sophisticated way, there must be this process inside these institutions, it's been dialed in over decades and decades of doing this, and you pull back the curtain, like, no, just people doing the best they can with hard choices. I mean, that's venture. And I wonder if you've had
I had a ton of imposter syndrome in the beginning, and then the more board meetings you sit on and things like that, you're just like, being a former operator, I know a lot more about how to do these things than a lot of these people do. So, but they're obviously, I mean, you named a bunch of them, but very incredibly talented and intelligent people, and just wise beyond their years, structured thinkers. Just it's incredible what you can learn even just by listening to some of these podcasts. You mentioned Jack Altman, what he's doing with his podcast, bringing on the Node and some of those types of folks who have just been in the game for so long and have these mental models. And it's so great to be able to hear that cheeky pint with the Collison brothers doing a fantastic job. Was just listening to Sunheim from D1 earlier today. So, I mean, just there's so much great wisdom that you can get from podcasts these days.
Yeah, I mean, what a time to be in the tech world more broadly, right? Like when I joined the tech world in 2012, it was like you could read Fred Wilson's blog and you could read TechCrunch, which was a very different institution at the time, and there wasn't a whole lot else to do. And now, I mean, you could spend all day just absorbing the content around the internet. I think it's much more about curating what's relevant to you and learning how to listen to things on 1.5 or 2x speed. So.
And everything's moving real fast right now. So yeah, it's good to stay.
I mean, you would ask thematically about something. I mean, it's funny. I think this is going to be one of the best vintages that I've ever invested behind. Even though prices are, nosebleed levels and founders have so much leverage, it's the replatforming of the internet right now. It's like, I've lived through periods where I've just been totally uninspired in this job. And I think, oh my gosh, if somebody pitches me the next sales tool, for the 100th time, I'm going to hit my head through a wall. Like I'm going home. I'm not doing this anymore. And it's the opposite. Every day I show up to work now, like this is crazy stuff. You might be wrong, but if you're right, the world's going to look very different in the next few years. And, to be on the front end of that is very fun.
Excellent. What's the hardest real life lesson you've learned as an investor in your tenure so far?
I think the hardest lesson I've learned has probably been around managing co-founder relationships and co-founder dynamics. I've had a number of co-founder breakups where the company has almost died on the back of the kind of fallout from those conversations. And I think learning through some of those that, you come into the job as an investor and you think people want advice. I'm less convicted that people want advice. I think oftentimes they want somebody to listen to them. And I think knowing when to talk and when to listen is a skill that I didn't have when I took this job, thinking, oh, I've got all these great. No, like sometimes people just want to vent. They just need to get things off their chest. It's a very lonely job to be a founder. And that's something I've learned over the years of appreciating that just being an outlet for people can be as important or more important than anything else you can do.
Yeah, it's a great call. That was another fantastic episode of the VC series on the GTMfund podcast. Head over to Apple, Spotify, or YouTube. Give us a like and subscribe, and we'll see you on the next one.